Welcome to the future of finance, where your investments do more than just grow. They make the world a better place. We're talking about impact investing, a strategy that's not just about dollars and cents, but about meaningful change. The Bridgespan Group has spotted sectors ripe for impact: education, healthcare, and financial inclusion. Imagine your investment dollars improving literacy rates or making healthcare accessible to marginalized communities. But it's not just sectors, it's themes. From championing gender equality to combating climate change, impact investing is a vehicle for your values. Picture your portfolio powering renewable energy projects or bridging the gender gap in workplaces. Now, measuring this impact is crucial but complex. We need standardized frameworks to avoid impact washing, where good intentions get lost in the noise. But make no mistake, the potential for positive change is enormous. So as you consider your next investment, remember, it's not just about what you earn, it's about the difference you make. Welcome to Investing with Purpose. Debra, you gave us some context into how to monitor and measure. Are there any themes or sectors that you're particularly excited about in terms of impact?
Well, it's a great question. And it's hard. I'm smiling because we've had this incredible opportunity. I personally have been doing nonprofit finance, public finance for an investment bank, finance as the head financial person for a nonprofit, and then almost 30 years at MacArthur working across so many areas. So we have an organization working to provide safe housing for women or survivors of domestic violence, which is in the UK. We have incredible women leaders in India who have created a venture fund for the next billion, the rising class in India, by providing essential goods and services in health and education and agriculture and financial inclusion. So asking me if I'm, would like place one of those impacts above another is really, really fun to think about, but pretty tough as a question goes. I would just say that, we are both heartened by some of the opportunity ahead of us in the climate arena in particular to bring together social justice, racial equity, and climate solutions. I think that's one of the most essential areas of all, because the time is of the essence. Investments are happening thanks to both public and private funds. And we know that if we do not pay attention to how that all rolls out, it's going to be business as usual. And the largest, most well-heeled players are going to be the ones that profit. And the communities that need the jobs and the entrepreneurship and the benefits the most are going to be left with much too little. And that's how it has played out in our country in the past. I wrote about this in a piece in Green Money about a year ago, and again in January on one of the foundation blog pages. So I do think climate justice in what has been called the decisive decade, climate justice is a challenge and an incredible imperative as well as an opportunity. But we can't be focused on climate alone. We have to be thinking as impact investors, as citizens of this world and stewards of this planet. We have to also be thinking about people and places. And we have to be thinking about how we close the racial wealth gap, the financing gap that makes it far too difficult for too many entrepreneurs of color and for women and others who have been historically underrepresented in finance and investing and business. It's too hard for them to raise the money that they need and to have a fair shake at building their enterprise and their investment vehicles. So we want impact investing to be inclusive. We want it to be equitable. And we want all of the best ideas and the best ventures to have access to the capital that they need to make a difference in the world.
Laura, whether it's your venture fund or SVX Mexico, how do you approach theme-based investing?
Well, for us, impact asset classes look very different in Mexico and Latin America. The universe of available products is really, really small. So just naming some ESG examples, like our first ESG index in the Mexican public equities started in 2020. So just imagine, like, it's super, super recent. So we don't have the universe of available vehicles and opportunities that it's unparalleled what you have available in the US, for example, or Canada, or Europe. So in Mexico, what we're doing is many of our clients are development finance institutions like USAID, like Global Affairs Canada, but we also get a lot of family offices. And since we started doing so much investor education, we get tons of retail investors, and some, close to being a family office, and then family office institutions and funds. And so what we started doing is the Sustainable Navigator, or Sustainable Investments Navigator, together with Citibank Foundation in Mexico. So basically, they sponsored us to do two databases, but it's public databases for Mexican investors of what is available in the public markets for them if they want any ESG or sustainable strategies, and what is available for them in the private capital space if they want an impact investing opportunity. So currently, we have a major focus. Everything we do is 1,000% biased towards biodiversity regeneration, because the lens we are taking towards climate finance is mostly an adaptation approach, since Mexico is absolutely vulnerable to so many climate vulnerabilities. So we do a multi-sectoral or cross-sectional between mitigation and adaptation, and we think nature-based solutions are one of those major investment opportunities in both Mexico and Latin America, because we're a biodiversity hotspot. And so we're really championing nature-based solutions above most themes. And precisely because we see the social and environmental impact in nature-based solutions as indivisible. So we see that it is possible to heal the environment through communities, and it's possible to heal communities through nature. So it's a reciprocal relationship that is super beneficial. And mostly our economies are based on commodity extraction mentality. So what we're doing is right now taking advantage of the ecosystem service monetization, starting with carbon bonds, but also biodiversity credits or biodiversity banks, which are very used in Colombia. And so really building a new asset class of biodiversity regeneration available in both Mexico and Latin America. And most of it comes from agricultural commodities, forestry commodities, but we also have other types of thematics in the Sustainable Investments Navigator, and that's what we show to the investors. And just one other example, for example, in the US, you have Kiva since like so many years ago, and people that have not a large wealth can be able to invest, and you have community banks. But in Mexico, the first legal crowdfunding platform for impact was just regulated like 4 years ago. It's called Red Girasol, and you can start investing from the equivalent of $25. And so Red Girasol has been one of our, let's say, blended finance partners for a while now. And it's amazing because if we imagine an agroforestry cooperative, coffee cooperative, and we put it in that platform, we get to showcase through a webinar to 15,000 Mexican retail investors. So it's not only an investment opportunity for them, but it's also a growth opportunity to get clients if it's a B2C opportunity. So it's just, asset classes are still growing in emerging markets, and we definitely don't have, the universe that you guys have available. But I think we're starting to have some possibilities, some diversity, and I think through education is how investors are starting to make their decisions and move in the capital.
I love the idea that small dollar amounts can have a large impact. Let's move to segment 4.